Bitcoin is back above $64,000. That happened while oil spiked, the Fed turned in favor of higher rates, and Iran fired missiles at U.S. ships. Markets closed Friday, July 10, 2026. Here is where everything ended the week. Like and subscribe for daily market updates. Today's agenda: top story, market snapshot, macro and central banks, geopolitical status, commodities, crypto pulse, earnings/IPO and deals spotlight, closing summary. Up next, market snapshot. It's Saturday, July 11th, and while the stock exchanges are dark, the two stories that matter most to this audience never sleep: Bitcoin and the war. Crypto just did something quietly remarkable. Bitcoin clawed back above $64,000 and finished the week higher even as the U.S. and Iran traded airstrikes, oil spiked, and the Federal Reserve turned openly in favor of higher rates. One market is closed for the weekend. The other, crypto, is wide open and holding its ground. The question into next week: can Bitcoin's resilience survive Tuesday's inflation report and a still smoldering conflict in the Strait of Hormuz? But why is the Federal Reserve pushing rates up when inflation is hot? Crypto is the one major market open this weekend, so start there. Bitcoin sits back above $64,000, up nearly 3% on the week, with Ethereum near 1,800, and that strength was earned straight through an oil shock and in favor of higher rates Fed. Now the closing bell you missed. On Friday, the S&P 500 finished at 7,575, up better than 1% on the week for its fourth straight winning week. The Nasdaq closed near 26,282, also up over 1%, and the Dow lagged at 52,637, actually down about 0.5% across the 5 days. The week's engine was the artificial intelligence trade. Nvidia jumped about 4% Friday, Meta soared roughly 6%, and South Korean chip giant SK Hynix stormed onto the Nasdaq in a record debut. Unpredictable price swings stayed calm, with the VIX, Wall Street's fear gauge, under 16, nowhere near panic. The tell for the week: even with a war on and the Fed leaning in favor of higher rates, money kept chasing anything tied to AI, and crypto quietly rode that same risk appetite. And how is this global conflict shaping up? The backdrop that makes crypto's climb notable is a Federal Reserve moving the wrong way for risk takers. Under its new chair, Kevin Warsh, the Fed held its key rate at 3.5 to 3.75% in June, scrapped this year's expected cut, and the meeting minutes showed a few officials pushing for an outright hike. Futures now put the odds of a September rate increase near 60%, a stunning flip for a market that opened 2026 pricing in cuts. The fuel is inflation, freshly stoked by oil, with May's reading already running above 4%, the hottest in years. That is why Tuesday's June inflation report, the inflation data, is the single biggest event of the week, and it matters as much for Bitcoin as for stocks, because crypto craves a softer dollar and lower yields, the opposite of what in favor of higher rates Fed delivers. On growth, cracks are showing. Existing home sales unexpectedly fell in June to about 4.1 million units as steep mortgage rates kept buyers home, though weekly jobless claims stayed low. The verdict: inflation risk is re-accelerating, while growth frays at the edges, a stagflation-tinged setup that keeps every risk asset, crypto very much included, hostage to Tuesday's data. So what does all this fighting mean for the price of oil? The war defines half this week's market story, with its tone shifting late Friday. A 60-day U.S.-Iran ceasefire signed in June has effectively collapsed following Iran's attack on 3 commercial ships in the Strait of Hormuz, a channel carrying roughly 1/5 of global oil supplies. In response, U.S. forces struck over 80 Iranian targets across 2 nights. Washington revoked waivers for Iranian oil sales and imposed new sanctions, while Iran retaliated against bases linked to the U.S. in Kuwait, Bahrain, and Jordan. President Trump declared the truce dead before a strategic rate change occurred. Tehran privately told officials the ship attacks were accidents caused by system errors and requested continued negotiations. Trump agreed to keep talks open despite ending the ceasefire agreement and holding off on further strikes. Crucially for next week, Iran's foreign minister travels to Oman today for mediation efforts with Qatar aimed at keeping Hormuz open. The backdrop remains grim. Approximately 6,000 seafarers are still stranded around the Gulf. Daily traffic has slowed from over 100 ships to just 15 or 20, and maritime threat levels remain severe. For crypto markets, the conflict presents mixed signals. It fuels inflation that pressures Bitcoin, yet every strike round so far failed to break the asset's upward momentum, bolstering bull resilience. The base case points toward an uneasy de-escalation, while a genuine closure of Hormuz remains the primary low-probability but high-impact risk. Investors must treat weekend headlines as fast-moving and unconfirmed until verified. Let's talk about the digital asset that everyone is watching closely. Oil is the war's clearest financial fingerprint. Global Brent crude sits near $79 and U.S. crude near $75, up sharply from the high 60s at the start of the week, though both eased on Friday as traders bet full-scale war wouldn't return, and as Iran signaled it wanted to keep talking. The driver is a straightforward risk premium on the Strait of Hormuz, sharpened by Washington pulling its waiver on Iranian oil exports. One reason crude hasn't spiked back toward its wartime highs near $120. The International Energy Agency now expects global oil demand to fall this year, the first annual drop since 2020, partly because the Hormuz disruption has dented Gulf exports. Gold, the classic haven, recovered to around $4,136 by Friday after a midweek dip, and China's central bank added the most gold to its reserves in over 2 years last month. Silver held near $59. The read, commodities are pricing this conflict through the oil barrel, which keeps the story anchored to inflation and rates. The same current Bitcoin has been swimming against all week. But corporate earnings also drove some major headlines this past week. This weekend marks the only major market focus for digital assets. Bitcoin reclaimed levels above $64,000 after rising 3% to 4% over 7 days of unpredictable price swings triggered by an oil shock, bond sell-off, and 2 U.S. strikes against Iran. Holding gains through such turmoil signals crypto is acting as a durable risk asset rather than a first-to-sell crisis hedge. The price now retests the $64,000 cap set on Monday. Breaking free could open a path toward last month's peak near $67,000. Over 300 days, Bitcoin has consolidated within the $60,000, $70,000 band in one of its longest-ever ranges. Ethereum approached $1,800 for nearly 3% gains on Thursday, while Solana hovered around $78 and XRP just above $1.1. With dominance at roughly 56%, capital remains sheltered in Bitcoin rather than chasing altcoins. Fund flows remain mixed. U.S. spot Bitcoin funds shed about $95 million on Thursday, with Ether funds down another $52 million, indicating June's record outflows have not fully reversed yet. However, investor mood is thawing as the fear and greed index rose from 22 to 26 off extreme fear levels. Bulls are circling a fresh draft of the Clarity Act, legislation that would provide clear institutional rules potentially landing next week. Ultimately, this trade hinges on macro data. Soft inflation prints allow Bitcoin room to run toward $67,000, while hotter numbers keep pressure on prices. That brings us to closing summary. 2 corporate stories bookended the week. The headliner, South Korean memory chip giant SK Hynix, a key NVIDIA supplier, made its U.S. debut and raised $26.5 billion, the largest ever American listing by a foreign company, with its shares popping roughly 13% from the offer price. It's now a live gauge of the AI memory boom. Earnings season also opened strong. Delta Airlines beat, posting record June quarter revenue of nearly $18 billion, an adjusted profit of $1.56 a share, and lifted its dividend 15% on surprisingly strong World Cup travel demand, though the stock slipped on higher fuel costs. The real tests come next week. Big banks led by JP Morgan report Tuesday, with chip bellwethers ASML and Taiwan Semiconductor close behind. Finally, let's turn to closing summary. The mood into the new week is confident but exposed. A market, and a crypto market, betting the AI boom and Bitcoin's resilience can outlast a live war, and in favor of higher rates Fed. The single biggest risk is Tuesday's inflation report running hot, which would harden September rate hike bets and pressure everything from stocks to Bitcoin. The single biggest opportunity is the mirror image, a cool inflation data that softens the dollar, eases yields, and lets crypto extend its run toward that $67,000 line. Beyond the data, watch this weekend's U.S. Iran talks in Oman, which could set the tone for oil and risk appetite when trading reopens. The week hinges on one number and one negotiation. If you want the crypto and macro map before the bell, subscribe, and we'll be back Monday. Bitcoin held steady at $64,000 despite global tensions in the Middle East, while oil prices remained near $79 due to ongoing geopolitical risks. Meanwhile, Federal Reserve Chair Michael S. Jawara signaled a potential return to rate hikes if inflation data remains elevated this Tuesday. Investors are cautiously optimistic that artificial intelligence and digital assets can outlast current conflicts, though an unexpectedly hot inflation report could shift sentiment quickly. Such news would likely strengthen expectations for September interest rate increases, putting downward pressure on equities and other risk-sensitive markets as the week begins under these volatile conditions. Thanks for watching Market Pulse Daily.